Hey everyone, welcome back to Corporate Decoder. Today we're diving into Stockyards Bancorp's report to see if they're banking on success or just holding on for dear life. Before we get into the nitty gritty, make sure you subscribe. We break down these filings so you don't have to, and join our Discord community linked in the description for more market talk. Alright, so what we have here is a current report from Stockyards Bancorp filed on July 23, 2025. This usually means something important happened that the company needs to tell us about right away, not just a regular quarterly check-in. The main reason for this filing is that Stockyards Bancorp released their earnings report for the 3 and 6 months that ended on June 30, 2025. Think of this as an announcement telling everyone how much money they made or lost during that time and how the company is doing financially. Stockyards Bancorp is a company based in Kentucky, and you might recognize their stock trading symbol SICT on the ASDAQ. Now let's get to the numbers because that's where the real story is. The company put out a press release to announce these results, and that's what's attached here. Investors and anyone interested in the company will be looking at this release to understand their performance. What we're really interested in is what those numbers actually mean for the health and future of this bank. Now let's talk about what this all boils down to. While the filing doesn't contain detailed financial tables within the HTML itself, it refers to a press release that would have those key figures. Typically, in an 8K filing that announces earnings, the press release attached is the golden ticket to understanding performance. We'd be looking for things like revenue growth, profit margins, and loan performance. For a bank like Stockyards Bancorp, understanding their net interest income, which is the difference between what they earn on loans and what they pay on deposits, is crucial. Also important is their asset quality, how many of their loans are likely to be paid back versus those that might default. A strong bank shows consistent growth in these areas and manages its risks effectively. For example, if their earnings per share say something like $0.85 compared to the previous year's $70, that's a 21% jump. That might sound good, but we need to see the context. Is this growth sustainable or just a one-off event? Are they growing through smart lending or just by taking on more risk? We'd also be checking their efficiency ratio to see how well they're managing their operating costs. A lower efficiency ratio generally means they are more profitable. We would also be looking at their loan loss provisions to see if they are setting aside enough money for potential bad loans. If this provision is too low, it could mean they are overly optimistic and might face trouble down the line. Looking at the broader picture for a bank like Stockyards Bancorp, their strategy is likely focused on expanding their customer base and growing their loan portfolio while carefully managing risk. Their competitive position in Kentucky depends on how effectively they can do this compared to other regional and national banks. Are they innovating with new digital services? Are they attracting younger customers? These are the kind of questions we'd be asking based on the details in their earnings report. Now to put it all together, from what we can gather from this filing, Stockyards Bancorp is reporting its recent financial performance. The key takeaway is that they are communicating these results to the public through an 8K filing, referencing a specific press release. Without the earnings numbers themselves, it's hard to give a definitive judgment on their financial direction. However, the act of filing highlights transparency and their commitment to keeping investors informed. The crucial next step for anyone looking at this company would be to actually read that press release and scrutinize the actual financial data. We need to see if their reported earnings reflect strong fundamental growth or if there are underlying weaknesses masked by good PR. What's your take on how companies communicate their financial results? Do you think the 8K filing process is effective? Let us know in the comments below. If you found this breakdown helpful, give us a like and subscribe for more corporate deep dives. And don't forget to join our Discord community in the description for ongoing discussions. Thanks for watching, and we'll see you in the next video.